Hello, YouTube. Fear is high in the stock market. We have a red alert or a crash signal. So, what does this mean? Because we managed to close back over the 50-day moving average and back over our 50 weekly moving average by closing just above 398.50. So, tell me why this matters because you've been talking a lot about failed moves. We had a failed breakout on Monday. Now we have a failed breakdown. So let's try to come back and talk about this a little bit later because this failed breakdown pattern is on QQQ, but it is not on the Dow. It broke down. So now we're going to talk about that crash signal because, man, this thing's sending off a red alert. What is a red alert? It means you better pay attention to this. So as we look at the signal right here, which is the 2-year note divided by the 10-year note, or basically short-term inflation expectations versus long-term inflation expectations. To keep it really simple, what does it show us? Record high. Ever since we had the Boston comment, we've gone up, up, up. Blue sky breakout, record inversion. What does that mean? We've never been this inverted at 27.3% or 1.27. We went from 1.2 to 1.27 basically in a straight line. This is a very accurate indicator, but it does not always tell us the timing. Sometimes the timing is off. So when we look at the signal here, it's telling us it is time for doomsday. But I tried to see if I could find the other side of the story, and I think I found it to see we actually have competing signals here. And I think it's because the market is just so confused right now. I know I'm confused. Make sure to drop me a comment and tell me what you think. So here we're looking at QQQ divided by DIA, or basically growth or new economy, divided by industrials or old economy. So why are we looking at this? Well, we're looking at this because there's something that's just really funky here. If the inversion's going higher, we should be seeing tech stocks go lower and the Dow go higher. That's what should be happening. So both of these charts tell us a different story. Ever since the beginning of the year, we've been on a relentless bid higher. Buy tech, sell Dow, right? Sell industrials, buy tech. We hit our 50 MA. We have a death cross. It's usually it's a lagging indicator. Usually means we're going to go lower. So we hit our 50 back off. Now we're up against it again here. And I would still note that QQQ is actually below 1, which means that tech is currently trading at a discount or underperforming industrials. So if we can get above here to about 9.2 or about another 0.1%, another 0.1, 0.2, that starts to give us a breakout here. And the reason why this is so confusing is because it just doesn't make sense. This should not be happening. So either this one needs to go back down, which means industrials start going back up higher, and we start seeing tech go lower, or the inversion's wrong. It's not 100% accurate, but man, it's like confusing out there. So if you're confused too, just stick around all the way till the end of the video, and I'm going to leave you with some clear takeaways because I think that with emotions high, we're vulnerable to making mistakes. So here's what happened. I shot this screenshot 45 minutes after the market opened, and we were in fear. We were at 40. We were in neutral yesterday. We dropped 7 points. That's a dramatic move. What's the reason why? ADP non-farm payroll came out. Then we got Jerome Powell starting to talk. We got Joel's job openings. And then we got a pause from the Bank of Canada. This pause here is really interesting, but I want to focus on the American data. The pause meant that the dollar went up, even as Jerome was talking, but ADP non-farm payroll should be a preview for Friday. It came in hot. Joel's job openings came in hot. So that's why the market was at 40 or fear. Powell repeats warning that the Fed is prepared to speed up the rate hikes if needed. He added one line to his prepared remarks. Market took that as like, oh my God, time to get fear. And it did. That's why we have the breakdown. But then we failed to break down and we closed here at 46. We're down 1 point versus yesterday. Market closed green. We're down 1 point on fear and greed. Whoa, what happened? What was a dramatic reversal? I believe it's part of the Bank of Canada. But again, more on Powell. Let's read the headline here. Powell softens tone and says March rate hike size is not yet decided. So it kind of sounds like he's talking out of both sides of his mouth. Yeah, it does. So yesterday was like, hey, hold my beer. Let's see if I can take the market down. And he did. And now the market's up. So is that what he wanted? Is this what he wanted to see? And the reason why I say that is because, as a reminder, we were looking at a clear pattern here. Let's actually bring the lines back. We note here that we go down. We're going to focus on the part where we stop going down, which is our short-term downtrend. And then we get over, right? We pop over it with the on the 50, get over the 50 with a gap. We get over the 50 with a gap. We have our reversal pattern. We fill the gap. We have our reversal pattern. We fill the gap. We have a lower tail. We have a lower tail. We're back above the 50. We're back above the 50. I noted we're back above the 50 weekly as of right now. Well, if the pattern repeats, like we should be getting a full reversal. Well, how could that happen? Well, I'll show you, and I'll show you where it's wrong too. Because on the weekend, I think we laid out a very clear plan. And actually, the last thing I want to do here is actually to zoom into a 15-minute chart, because I wanted to show this yesterday, but I kind of forgot. It's that I've been looking at the ES, but I'll focus here on the S&P. Just look at the lines. There's a pink line, there's a white line, and there's a green line. So let's look and see what those mean. Because on the daily chart, it just looks like we went from the pink line to the green line. What does that mean? Well, red means resistance. That's why it's red. White means important. It just means it's a notable level. Pink is a pivot. So pink is the most important one other than green and red. Then we got another important area. And then we got a green line. So we basically went from the pivot down to support. And then what happened? Well, let's look. So we went from right head and shoulders, knees and toes. So we pivot off the pink line, shoot right down to the white line, try to dead cat bounce and curl back up, reject on it, which forms our head and shoulders. So then we get our head and shoulders, then we get the knees and toes, and now we're trying to just flatten out, right? We see that we have like a descending triangle, not quite sure if it's a channel, but we're trying to bounce off an area that is just above the green line. So the levels matter. So if you know what the levels are, like it's like really important, and like it's like pretty easy to call right now, just because if you trust the levels and you understand that failed breakouts and breakdowns mean the psychology is changing. I just showed you. We were at 40 at 9:44, 9:45, and then like hours later, we're at 46 for fear and greed. What's happening? Well, Jay Powell keeps confusing the markets. Yep, he's confusing the markets. And I'll leave you with a key takeaway at the end of the show as to the reasons why. It's my current take on it. And I forgot to ask the one time only, if you wouldn't mind, please smashing that thumbs up and consider subscribing to the channel if you're still enjoying the content. I had to re-record 2 or 3 times now, having issues with the recording. I would really appreciate your support. So I really want to think about, and please drop me a comment. Do you notice some of these emotions in other traders or in yourself, where we're going down the slope of hope and then back up the wall of worry? Because if the emotions line up and the technicals do too, it's worked well in the past. Why would it not continue to work now? All right. Since I'm re-recording, let's just get this one out of the way too. GDP got revised again higher. Yesterday it was 2.0. Now it's 2.6. Man, this is confusing. Yep. And I told you there's that key takeaway at the end. So we looked at this chart at the onset of the video. It's QQQ divided by DIA. And we have 2 patterns here, or a inverse head and shoulders or a cup and handle. So if we start booming right now, get over that 50 as I noted, and just get over 0.92, 0.94, that's the cup and handle with the handle that's just going to push higher. If we stay flatlining here, it means we're forming an inverse head and shoulders, or there's a base forming. So what does this mean? Well, here's the holdings in the DIA. It's UNH or United Health, Goldman Sachs, Home Depot, McDonald's, Mixed Thinks, right? Caterpillar, Microsoft, Amgen, Visa, Boeing, Honeywell, versus the FANGs, right? The trillion-dollar companies, right? We got top holdings as Apple, Microsoft, Amazon, Nvidia, Tesla, Goog, Meta, Broadcom, Pepsi. Oh, okay. Well, that's like most of the trillion-dollar companies. Yep, it is. So big tech is outperforming, and the old economy is lagging. Okay, why? Well, people are buying growth. They think the Fed's done. They're voting with their money. There's also going to be a budget proposal tomorrow from Biden. Pay attention to that. Might move the market, might not. We talked about the 40. We went to 45. And then we'll talk about this in a moment. I'll get the rest of my notes out of the way here. Oops, I think I repeated that one. Powell repeats the warning. Bank of Canada holds rate at 4.5. As the market like, I hear you talking all these hawkish words, Powell, but I don't trust you. I think I'm going to buy tech. That's kind of what they're saying, right? They paused. So it's an official pause now from the Bank of Canada. Deepest bond yield inversion since Volcker suggests hard landing. So I think, again, not I know, but I think that what Jerome's trying to do is to give himself some optionality. And give himself some optionality in terms of, okay, well, if I come out and I'm like super hawkish, how far does the market go down? Well, it came down to support. So he knows I can probably continue to talk hawkish and the market's going to discount me. So I can say I'm going to keep hiking rates. It gets priced in. And if we do have that Volcker shock, which is what he's so scared about, that he can do it. He's forewarned, or again, provided forward guidance, which means he's guiding the market to where he wants to go. That is not what the Fed used to do. They would surprise you. So I believe that that's what Jerome's doing. Here's the takeaway now. So on March 31st, there's going to be a scorecard provided for all the money managers or market makers, which means they're going to be compared against the index or SPX on a 12-month basis, which means They have to be outperforming 3.97%. So whether or not they love the positions they're in, their goal is to beat the market. It's why they're managing your money. So if they're not getting more than 4, you're like, well, then why am I paying you fees? Why don't I just go buy SPY, get my dividend, and then call it quits, or go buy some treasury bonds? That's the question. So for me, I've been looking at how many moves I've been making, and I'm a little minnow versus how many moves these market makers have to be making. It must be confusing and it must be difficult to deploy capital with confidence. Why? Powell is talking out of both sides of his mouth. So the challenge here is just that we have competing signals, both from the right. We have a failed breakdown on SPY. We got a failed breakdown on QQQ, but we got a breakdown on DIA, which means there's certain pockets. It's pretty close here, but like it is technically a breakdown. It's not a failed breakdown. There's pockets of the market that are flashing good signals, and there's ones that are flashing bad signals. So with the emotions really high, in tomorrow's video, we're going to pick up as to whether or not the slope of hope is leading to the wall of worry. The more people worry as we go higher, the more bullish I'm going to get. So thank you for watching. I look forward to seeing you tomorrow. Thanks so much.